Good evening, everyone. Welcome to Journey to Become Wealthy, day 54. Today was a crazy day, right? Crazy day, a lot of volatility. The markets ended flat, but they were coming down. A lot of people may have jumped ship. I mean, it was crazy, right? I just can't imagine how many people probably jumped ship today, only for things to come back to where they were. And that's pretty much what we got to look forward to this market. Before we get too deep into it, y'all take a moment, please like, subscribe to the video, hit that notification bell, just so you get the notifications when videos are posted. Take a moment, go follow my Instagram, and just don't forget to continue to show some love and support. Thank you. Let's get into it. So today, the markets were pretty flat, right? The Dow it says positive 0.29%. S&P 500 positive 0.28%, the NASDAQ positive 0.63%. We got the Russell major 2.29% up for today, right? Crazy. But if you look at it, look at this thing. Look at it, right? And this today, hopefully y'all can see this good. It was all the way down. So coming into today, it was on its way down, constantly dropping. And somehow it made a bounce back. It came down as low as 1935 and made a comeback, right? And which again put it pretty flat on the day. But again, we're still down 5.87% for the week. Still down 5.87% for the week. Let's check out the S&P 500 this way. Let's see what it says. S&P 500. Like I said, say it's up 0.28%, right? Up 0.28%, but look at how far down it came today. It came all the way down to $4,200. It's just so happened to made a bounce back. I think they call this the dead cat bounce, right? I mean, things go down, they get you scared, you get to jumping out, you start selling low, and start to buy back in high when things start going back up instead of just holding long and strong. And that's kind of what I've been telling you guys. In this market, we can really look forward to some differences, right? We're gonna see some different things going on. It's going to be kind of crazy because the fact is that this is a market like it hasn't been seen in quite some time. It's expected that we're going to have a bearish year in 2022, and that, I mean, the market's going to be going down. So what you see is I've been hearing a lot of people, a lot of these big time investors, a lot of these hedge funds, what they're doing is they're getting out of their plays and they're pushing the prices down, because they're causing fear, uncertainty, and doubt within retail investors. Small guys like me and you, they're forcing us to get afraid, and now we're jumping out, and now every little bit counts. So they're able to get back in at the bottom, pushing the price back up, and now, we get that emotional gratification. We get excited, and we go jump back in on the way back up. So we done so low, buying it high again, instead of just holding long, continuing to average down, and just make more money on the ride. Again, I told y'all, this year 2022 is going to be a roller coaster. But hopefully this is the year where a lot of us make money, right? Hopefully this is the year where a lot of us double down. We start to bring our averages down. And hopefully we reap the benefits of this around the end of the year. At least that's my game plan, right? Because I know that I've invested in good companies. So I know what they're valued at. I know what they're worth. And I do know what they're going to return to. So the fact that I'm getting these prices this low, of course, I hate to see the red. At one point today, my account was down $2,000. I was like, good Lord, why me? But I held on. And literally, just like you see this thing came all the way down here, my stocks came right back up, and I ended up flat on the day. Didn't make any money, didn't lose any money. And those are the days we have to look forward to. I mean, but we do have those days coming in the future where we may be down a few $100s. So you guys have to make sure that you be aware. Be careful. Do not allow this thing to scare you out, and don't lose money. I mean, this is short term. I know it's short term. That short term gratitude is major. It's major, but don't allow it to scare you out. Okay, so on the pre-market movers, we got BRO, ticker symbol Brown and Brown Inc. up 17%. I'm not sure what this company is or what they got going on, but man, we might want to look into that. Up 17%. It may have more positive momentum for tomorrow. And for those of you who do need that short-term gratification, maybe a quick money play, get in, get up, get out. So, might be something to consider. We got some things on the downside. Looks like the positive is a lot heavier than the negative. Maybe we can expect a positive day tomorrow. We see the indices are up. We saw the Russell was up 2%. Maybe we can see 2 or 3% gains on tomorrow. But again, don't you guys get hasty. If you didn't buy it while it was low and red, do not buy it now when it starts to spike up. Hold on a minute, wait for it to dip again, wait till it gets to your entry price that we know you did your research, although your entry price may have changed because things are different now, right? We're in a bearish market. People are expecting things to come down and crash. So don't be caught. Your entry price may be 10 to 20% lower than what it should be. So we had to reevaluate now. We had to reevaluate every week. So that's going to be another reason why I'll show you guys the portfolio, what the plan was. But this is going to change for me. This is going to change for me because I need to reevaluate my entry prices on all of these things, especially seeing that most of these have come under this entry price. And I have entered in some of the ones. PayPal, I'm in. SoFi, I'm in. Apple, I'm in. Wells Fargo, I'm in. Goldman Sachs, I'm in. BTI, I'm in. So I'm in most of these. However, I need to be trying to determine how low am I going to be willing to average down into these, right? Because I only got so much money. I'm not a millionaire. I only have so much money to put in. So the next time you guys see this, some of the prices may have changed. Maybe you may have missed it. Maybe we missed it together already. When it came down, maybe we didn't buy it because we were afraid of what the market was going to do. We didn't buy it, and we didn't hold for the long term. So it's okay, but that's okay because it's always another day, right? It's always another chance. So let's check this out. One thing to talk about: stock futures are a little change of the volatile session. Dow Jones futures fall as market correction shows no mercy. Fed meeting. That's what I want to talk about, right? We know we have the Fed meeting. I want to say there's 2 Fed meetings this week, right? 2 Fed meetings this week. We saw the Fed meeting about inflation. What happened, right? We saw the stock market shoot up like a rocket after Jerome Powell spoke, and the very next day, it took everything and more that it gave, right? It took everything and more. I think it shot up 3 or 4%, 2 to 3% maybe in most of our companies, and then it took back all of that and some, 4, 5, 6%, 7%. Even now today, we see ourselves being down. The Nasdaq was down almost 10% just the other day when we looked at it, when we talked about it. So let's not be tricked by that this week, right? So let's expect things to come back down. Also, this is a week of earnings. This is earnings week. So a lot of these companies that we're in, maybe not, are having earnings, and earnings could negatively affect the stock price of the stock. If the company earned less than what was expected, lower EPS than expected, that company could go down. Similar to Netflix. They beat their earnings. However, their prediction for this year was saying, hey, we don't predict we'll get as much this year. So people sold off. People didn't see them making future income. That's the important thing. It's not how much you made in the past. Of course, that is important as well. But how much more can you make us going forward? So the reason why Netflix sold off is because they predicted that, hey, we can't make you very much this year going forward. And that's what investors want, right? They want to invest in a company that they feel like can make them long-term profits. They want to invest in a company that can make them millions going into the future. Okay, you did good last year, or you did bad, but what's the plan for next year? And they didn't have a solid plan to make the investors feel like they were worth holding on to. So Netflix tanked. Let's check this out. Fed meeting leads, five big catalysts. Let's see if I can find that immediately, right? Dow Jones futures fell solidly Monday morning along with the S&P 500. Again, y'all saw that fall. It fell, but it also came back up flat and on the positive side. Tesla stock and Dow Jones giants Apple, Microsoft, and Caterpillar are on tap this week, along with dozens of other quality companies, but the main event will likely be the Federal Reserve meeting on January 25th and 26th. January 25th and 26th, Tuesday and Wednesday. So you guys be ready, right? Be on the lookout. I am probably not going to be... I bought some today. I averaged down on NEO, I believe, and one other company. We'll get into that. But those are not companies that I'm recommending for this year. I just saw the price so low. NEO and ChargePoint. Those are my EV plays, right? NEO is an EV manufacturer, and ChargePoint is the charging stations over the EV companies. They provide the batteries and things like that. I average down in those two companies. However, I am not recommending them to you unless, of course, you go do your due diligence and that you're excited to get into those. Because those, for me, are 2-3 year plays, right? I'm holding those 2-3 year plays. And I actually have 200 shares of each company, but I'm losing money in them as of right now. Of course, I made money in the past, but I pretty much given most of that money back as of today. So that's not to say the stocks that I sold, but as far as what I'm holding right now. So just so you guys be aware. The Fed meeting announcement Wednesday afternoon and Fed Chief Jerome Powell's news conference could set the tone for the stock market and Treasury yields for weeks to come. So this is where they're going to hopefully tell us that we're not going to increase the interest rate this month. We're going to wait until February, or we're going to pause. We're not going to sell any more bonds, or whatever the case may be. Some good news for us, hopefully. Or this is also because the interest rate is a big deal, right? Hey, we're going to increase the interest rates, and hopefully that we hoping that they don't say any more than what they've already given us. We know that they told us they would have 3 interest rate increases this year, and we were expecting the first one to be in March. But if they come out and say, hey, inflation was a lot worse than expected, and we need to attack it immediately, and we're going to increase the interest rate this month or in February, we can expect to see the market come down. However, if they say, hey, no, we're sticking with our 3 increases, there's no need for any 4 or 5, we can expect things to kind of either stay flat or go to the moon. Hopefully they go to the moon. Hopefully the Fed doesn't give us any bad news. Fed Chair Jerome Powell sounded pretty confident the last 2 times he spoke. So I got my fingers crossed that things are good going into this week. Tomorrow's Tuesday and Wednesday. I'll be watching for you guys. Hopefully you guys can watch it on your own, or possibly I can share it on Instagram. If you guys follow my Instagram, you know I post it there. I'll go live at work. I still got to do 9 to 5, right? Let's not forget that 9 to 5, because this is how I support this. This is how I fund this my journey to become wealthy. So let's not forget about that. So, but the real issue is what happens next. Fed Chief Powell will likely offer commentary on the timing and pace of interest rate hikes and balance sheet reductions. Talk of reducing the balance sheet and at a fast clip has been a big reason why the 10-year Treasury yield has spiked and the stock market has entered a correction. So what they're talking about, again, the Fed starts selling their bonds. They said we're not going to buy as many, and they said we're going to increase interest rates. They went from buying, I want to say, about $120,000 worth of bonds a month or ever so often to now only $30,000. So they were propping up the economy. They were stimulating the economy. They were putting it on. That's why it was so easy for people to make money, right? People were able to make that money easily based on the fact that the Fed was helping. The Fed was helping. They was like, hey, we can make money. Let's help the economy. Let's pop it up. Let's buy these bonds. Let's buy everything we need to. We'll continue to boost up the economy. But now they're like, nah, we're not doing that anymore. It's time for y'all to get back to us. Now it's time we can put some money back in our pockets. We did our job. We did our job too well. That's why inflation rates so high. We did our job too well. And many of you may be seeing it now. I mean, you go to the grocery store. You go to looking for a house. Whatever you may be doing while you're out shopping, you see that prices may have risen just enough for you to be a little aggravated. Or you be like, man, I can't buy as much this time as I did last time. Again, that's why we're investing, right? Because we know that the inflation is going to beat out our pay raise almost every year, right? Year over year. We know that Social Security is not going to pay us to live once we get there, right? We know this. So we got to be sure that we're prepared. We got to make sure we're investing. We make sure we have a 401k. Make sure we have that life insurance policy. Make sure we're setting our kids up for the future, right? For the generational wealth portion of this thing. So, yeah, we just want to make sure we're doing those things and make sure we're taking care of business. So, these right here are pretty much talking about the earnings for the week. And you guys can take a moment and look for those. If you're in them, just be aware of what the earnings are. Maybe you can listen in to the earnings calls. If you're not in any of these, then hey, you're safe, right? You're okay. However, you may not be safe from the Fed. I can't protect you from them unless you sell out like some of the other people did. People who may have been bought up at the top. They may have had money up here and now they want to get out to protect their investment. So I can't do that. I can't say necessarily that because, hey, I'm new here, right? I'm just like you guys. I've been doing this for a few years now, and I finally got to a point where I'm really good at making money on this thing. So, hey, we all in this together. We're learning and making this journey work. So let's check out the tech sectors, right? Technology, pretty much flat, right? Some a little red, but again, pretty flat. Microsoft, Adobe looked like it had a pop, 3%. But again, if you look at that trend line right there, it looked like it got pretty beat down. I mean, it was already beat down. Now it's just coming back from the beat down that it already had. I don't see anything else in here that's popping. Financials are down, but again, primarily flat. At least we didn't lose any major money today like we have been doing all last week. Goldman Sachs down, Morgan Stanley down. Y'all know I always call out the ones that I'm invested in, but you guys feel free to come in here if you want us to check out one. Leave it in the comments. We'll check out one. Y'all feel free to come here and check out the entire sector if you so please. You can look at the entire banking sector, the entire technology. Well, not of its entirety, but as far as what this webpage provides, right? You can look at it more detailed and get more intimate what companies are available for you to invest in. We have communication services here. Google pretty flat. Facebook up about 1%. And I started to buy some more Facebook today. However, like I told you guys, I'm out of money at this point. I'm constantly investing. I'm constantly averaging down. And I'm going to do that until, hey, I just really don't have any else to give. I mean, it's like I said, I'm using money that I don't need at this moment. It's money that's not pressuring me. Healthcare is down. Healthcare got beat down, but again, we still see Pfizer hanging out. It actually came down to this $51 range. It's been hanging out though between 53. It was hanging out between 53 and 56. So now it's at that 51. It broke below that resistance line, I guess. Consumer cyclical pretty much flat, about the same. We see Baba down 2%, Amazon up 1. But again, look at the trend line right there. It looked like it may have came down. Just recovered just enough to make it not look bad. So it's still severely beat down based off the past week, right? And we're not winning. We're not making any money right now. Tesla still coming down. It was down in the 800s today. It was looking real nice today. It was down in the 800s now almost. Again, I told y'all, for me, seeing that how low these things are coming down, it's gonna have to come below the $700 range now for me to jump in, for me to just go ahead and throw the money at it. We had to come below that $700 range. NEO down 9%. Real estate looked like it's pretty flat. So it looked like the entire market flat. Utilities are flat. Basic materials are flat. Industrials are flat. Again, if y'all want energy, flat. Again, though, if you guys want to get into this, let me know. We'll look at it. I like the trend right here on energy. Right, ExxonMobil looked like it actually went up, made a pop today. Now I'm not saying it wasn't down for the past week. However, the trend line on it, just based on this quick glimpse, looks a lot better than what we've been seeing and having over the past 2 or 3 weeks. Past 2 weeks, week or two, I'll go with that, 2 weeks. Crypto, right? Some of you may have bought crypto this weekend. I told y'all Bitcoin came down to 33,000, 32,000. Hopefully you bought some. Hopefully you got in. Hopefully you got up. Hopefully you're up right now. At least this 1%. And looking forward to more future gains, right? Luna down 4.94%. Dogecoin down 2%. Shiba Inu getting beat down. It is down 8%. It is down to 4 zeros and 20. Ethereum down 2.54%. Down in that $2,300 range. Again, if it hits $2,200, I'm buying in. I think it came down to 21 today, but I was at work and I missed it. I could set my buys, but I got to make sure I'm managing my money and looking at everything else that's going around too. I want to make sure that I'm being aware. I don't want to set a limit buy, and this thing's a falling knife. Comes down $1,500, and I could have got it that much cheaper. Because if I can get it at $1,500, that's where I wanted it. Because it's ridden all the way back up to $6,000, $5,000 in this past year. So I want to make sure if this may be my opportunity to get one whole Ethereum by $1,500, maybe my opportunity to get an entire Ethereum. So I want to make sure I catch it at the bottom. Cardano 88 coming down. It's down 3.56%. Let's check out, see where we find Mana. Right, where's Mana? We got Sandbox right here down 1.05%. It's probably tired of taking that beating. Crow down 0.53%. Mana's actually up 2.09%. Again, it's lower than what we at first initially started looking at, but this gives many of you the opportunity to start averaging in. As I told you before, we try buying in thirds, right? Put your first piece in, second piece, and then your third piece when it comes down to the range that you actually like. Just like Goldman Sachs, y'all saw me buy Goldman Sachs high, right? I was like, okay, boom, it's coming down, it's getting closer. I bought the second strike of what I like. The third strike, if it comes down any more lower than what I like, I'm going to average down even more. I'm going to throw even more in it. So that's how you kind of dollar cost averaging, right? You buy it low. You don't continue to buy high. Now, however, if it's a company like VTI, you're investing in over the years, you want to continue to add money, consistently add money, because, again, that's a company that's going to pay you dividends. It's going to guarantee to make you some money in the future. Maybe not today, maybe not tomorrow, and it may not be the quick, fast gains that it may not be that immediate gratification that you're looking forward to, but it's gonna beat out your 401k. It's gonna beat out Social Security. So BTI or VLO, two companies that I highly recommend. So I think that's what I had for y'all. Let's see if I had another article. As markets churn, batter investors brace for Fed meeting. We already discussed that, the Fed meeting. We already looked at the markets tomorrow. Looking at the futures, I mean, we got a lot of signals saying that tomorrow could be a green day. But we also been caught on that bull trap before, right? The bull trap where they make it look like it's going to be positive and things are going to return to their greatness and we get beat back down. So I just want you guys, I can't tell you guys whether tomorrow's going to be positive or negative. I'm just going to tell you guys to be aware. Look for those buying opportunities. Do not be in a rush. This is not a rushing game. We are here to invest in good companies, be smart about it, and let's make some money. If you see it going down, again, I try and skip that first 30 minutes of the market because that's when things are the most emotional and volatile. You'll see your stock come down 20%. I'm telling you guys, I saw my money bottoming out today, and I was like, golly. But I had the fortitude. I bought in while it was those lows. When I saw it coming down and I saw it start to trend back up, a constant trend, I bought it low. I bought the dip. Again, it may not be an official dip. It may not be the bottom of the dip. However, I took advantage of it. And just in case things do shoot back to the moon tomorrow or the remainder of this week, or the Fed tells us some really positive news and things go back to the moon, I bought in at the lowest I saw it for today with what money I had left. So you guys be aware of those type of things, right? Want to point out, I know this video I said is kind of long. I said it might be kind of long, but it's okay. The wealthy word of the week: consistency. Consistency. You guys make sure, even if you're not consistently investing, make sure you're consistently learning something, and make sure you learn something every day. I mean, I'm on here every day learning. I'm on here every day doing research. I'm reading up. I'm making sure that I'm smarter, so I make you smarter. I'm making sure that I'm investing better, so I make you guys invest better, so we all make money together. So I don't care. You don't have to watch me to learn. You don't have to listen to me to learn, but just make sure that you're being consistent in your growth, right? Be consistent in your growth in year 2022. 2022 could be a good year or it could be a difficult year, but however, continue to grow, continue to move forward. A body in motion stays in motion. That's one thing I learned in physics. A body in motion stays in motion. So if you continue to move forward, I mean, nobody can stop your forward progress. However, if you sit still, if you allow yourself to be stale and stagnant, that's forever where you'll be. So I encourage y'all to be consistent, continue pursuing your goals, continue pushing forward, and you'll be great. I thank y'all for joining me tonight. Joining to become wealthy. Hope y'all have a good night, and I'll see y'all tomorrow.